Hello and welcome to another update on FET, the FETCH.AI chart. Lots of requests for this one, probably because we had some a good reaction here to our support zone around the 19th of May. Sort of you guys are interested in understanding the probable scenarios here and the risk associated with the rejection from yesterday's top. So overall, I'm tracking very similar movements on several charts. We do have on this chart a potential 5-wave move to the upside, as you probably remember from previous updates. We've got this wave 1, wave 2, wave 3, wave 4, wave 5, so I can call that already a potential 5-wave move to the upside. But the problem is, with a structure like that, the pullback was really too shallow to be considered all of the B wave. So a 5-wave move up in wave A, normally you would expect it to be corrected in a wider ABC structure. That hasn't happened yet, so it can still happen. That's the risk. Or the opportunity, depending on how you want to see it, isn't guaranteed, because the yellow scenario is possible as well, which would be a more direct pathway to the upside. But that is definitely still something that could be considered a probable scenario here, a C wave to the downside, which is definitely valid as long as yesterday's swing high stays intact. Yeah, I think there's a really good chance we get that C wave decline, but we don't need to go down that much because we have an overshooting B wave. So it's very much possible that we don't even touch that support area. Okay. And that's because an A wave and the C wave, they tend to have the same length. So what I will do, I will remove this support area. We do not need, oh no, I need to keep it. I need to keep it for the white scenario, for the yellow one. So we'll leave that where it is. It's still relevant. Okay, you can see the price reacted nicely to it. So we want to keep it. But it's just possible that we go down a little lower, maybe into the region of these previous swing lows to test them again, even in the white scenario. Yeah, so possibly testing 64 cents to 71 cents in the next stage. To confirm that, I want to see a break below 83.6 cents. This is the first line of support, micro support, against which the yellow scenario could climb higher more directly, which I don't assume. Okay, I mentioned that in one of the member updates earlier today. I don't necessarily assume the yellow count to play out, because in the wider crypto sector, it seems probable that we have a range of B wave price tops there. Doesn't mean we have to crash down or anything, but it might mean that a little bit more of a correction is unfolding, and a break below the 50% retracement of the last rally would suggest that we are heading down a bit lower. Okay, that would break at least this immediate uptrend. It's not necessarily bearish, but it means the market needs to take a breather, which is not a problem after a rally of around about like 40%. Okay, so if that happens, then first of all, I would focus on this support area again. 68.5 to 72 cents here. Yeah, it could be tested again. If we break below it, then sort of the area around the 6th of May low. So that's the white count in which we could be moving down in the white C wave, but it needs to be confirmed further, and I explained to you which level needs to break to do it. The yellow scenario, the way it is currently defined, we could say that we are taking the direct route to the upside, and we already completed waves A and B here on the 6th of May, and we're now moving up in a C wave more directly, because this was an upside impulse, the rally after the 6th of May, so this could be wave 1 up. We had a corrective pullback into standard support, could be a wave 2. So we can watch for a third wave rally. That should take us to $1.17 plus. That means at the moment we don't have the third wave completed. But has the third wave really started? That's the main question. And it can have started, but with only 3 waves up and that sharp rejection, it's a bit questionable. Okay, but we're still holding micro support. So any break below micro support could mean that we've just formed also in the yellow wave 2, just a high B wave. And we're still working on the wave 2, and therefore I said this support area would then be the next one to watch, because it could be that this is a wave 1 and then A, B, C, and this is it. This is it. Could be classed as the yellow count. So it will be in reality, I think, difficult to distinguish between white and yellow. Do we need to distinguish? Maybe not really. Yeah, they're both bullish scenarios. So I think the main focus at the moment is on the 83.6 cent level, which I don't necessarily expect to hold. But if we now see a sharp upside move, then we're likely working on wave 5 of 3. But the problem here is, which is also why I'm not so convinced by this scenario, the wave 5, the micro, would really need to stretch to get to the $1.17 level. So yeah, I would at least prepare for a break of support. It's not broken yet, but if you prepared for it, then you already have the next key levels to watch there. And that's great. That's exactly what we're here for, to help you understand what the relevant levels are that keep the structure intact. That's the update on FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.